The idea of an exhaustion trade is a point that tells you this is the end of the move, this is where to get out of the market. So the example comes from the CPI number. This number for the S&P was very much a double whammy number. What we got is a beat on all the CPI indicators, and then also misses on the retail sales. So the high inflation number, bad news for the S&P in terms of higher inflation, higher interest rates. The low retail sales number is showing that you're not seeing consumer spending, you're not seeing the economy growing as perhaps you would like to see. So you've got a double reason that the S&P can be going down. Weak economy with higher interest rates, not an ideal picture for stocks. So let's go and have a look at the chart, the context coming into this. We got the lows of the day at this point, which were coming in around about 66s. We then got this drop, so this is your 50 handle drop in the S&P. Now what the area that we're going to be talking about is this little drop down here. So if you manage to get in on this move, the question is, where do you get out of it? Now the price action gave you a great clue. As we broke through 34s, this little flush down, that is what's going to get you out of that trade. It shows you that people have exhausted the move. There's a panic to finally either stop out of any longs that people have bought, or people's last chance thinking, if I don't get in now, I'm going to miss the move. And that's what creates that final flush. That final flush is the opportunity to buy for the bounce back up. Now, I'm not suggesting if you are trying to buy this that you're going to look for the total reversal, which is what we ended up getting. But initially, you're just looking for a bounce back up until the market slows down. That's the point where you can then sort of step back and go, okay, now we'll see what the market's got left in it. But it's taking advantage of that exhaustion, one, to get you out of the trade, and two, potentially to give you a short-term reversal trade. So I'll bring up for you now the ladder, and I will have to step away from the screen momentarily just to give it a little scroll down, because this S&P, unless I can scroll there, S&P drops extremely quickly and will actually obviously take out 61. There's the first move down towards 70s. Then the continuation goes very, very quick. Watch the size that comes in as well. The size starts chasing the market down. You get a couple of little bounces, backups, and then you get more size coming in. So that's your opportunity to have a go at selling it. Didn't manage to get filled. Each time it bounces, that's where you can have another go at trying to sell. S&P continues to come off lower, down towards 52s. Another 800 comes in. Another opportunity to sell. Remember, 45s is the level down here now. So that's the area that you can be looking for. That would be your first target on any shorts on this move. Drop down to 48. You see the size keeps coming in. Managed to get out at 46s. Then the S&P does spend a little bit of time sort of chopping around between 45s, which is the level, and then right the way back up to 52s. If you're aware of this sort of chop period, and that's in this second minute, and you see this doji that gets created there, that's where you can sort of take a little bit of time to step back and try and work out how you can get into this trade. Are you going to try and play the break of 43s, or are you going to try and get in higher up where you've seen the market retracing back up to? So get down to 45s again. It seems like we're getting a little bit heavy. Gets whipped straight the way back up. So that's people taking the opportunity to buy this market back if they've managed to get short early on. We're still not seeing that exhaustion trade just yet. Back up again, 51, 52 area. Now you're getting 500s coming in again. Each time you get the size, rather than it running from it, as we were seeing earlier, the size keeps the market lower. It's only once you get a more solid offer without that whip back up that you can feel that the market is about to start going lower. You see those hundreds coming in and they actually get filled, but the market was not getting any higher. So you can have another go at selling this here. and then we start looking for the move a bit lower. So through the 45s now, down towards 42s. Now remember, this area over here, 34 3/4, that's the point where you get the exhaustion trade. So dropping down towards the mid 30s now. I'll leave it here because this is the low of where we blip down to. So we get down as far as 27s. And it's this bit here, we're still trading 34s, getting towards that level. And then you'll see this sudden drop, 32s. And then in one big splash, straight the way down towards 27s. Now, I'd already put the bids there to illustrate this trade. I think to have a bid there already would be a little bit, lucky really. But the point was, it was as it got through those 34s, yes, we held 31s, and then you got that final splash down really, really fast, straight down towards 27. That's your point where you exit. That's the exhaustion trade. It's a lot faster than everything else. It took all the prices in one go as well. It wasn't a situation whereby you got, as we saw earlier, where you've seen trades down, trades back up, trades down, trades back up. It was that one flush, all in one, takes all the prices out, and it took about 7 handles of prices out there. That's your exhaustion trade. That's where you get out. And if you're fast enough, you can get the cut and reverse as well. So realistically, you probably end up buying it around 28, 29 area. And then target wise, I always look for the point that that flush came from. So 34s for me was the target. Yes, we do break 34s, and yes, we do end up drifting all the way back up to the highs, but that's not the trade you're looking for. The trade you're looking for is a reason to get out, and then the opportunity potentially to take a quick reversal the other way based on that quick splash down of prices.